Here's an overview I want you to pay attention to. So when we think about Form 3115, this is what I want you to look at. So this is the application for a change in the accounting method. And so at the top of the form here, you have to put the name of the filer. So in this case, this can be the name of the parent company, if this is a consolidated group or just a regular business. So for our hypothetical situation here, we put Sweetie Kiwi Ventures. You put the EIN of the company, you put the address, you put the tax year of the change, that when you want the change to begin, and also when you want the change to end. So it's really important. And you want to put the name of the contact person that the IRS may reach out to if they need extra help. And the contact person also, you want to put their telephone number. So the phone number is really important. So the bottom end, so the next section here is that you want to check the box that really indicate the type of applicant. So here we have a corporation, a C corporation, but you want to choose the specific box that corresponds to your situation. It can be if you're an LLC, it must be a partnership. You have to check partnership. But for us, if you're a C corporation, you actually check corporation. If you're an S corporation, you check the appropriate box. And so part one here, as you can see on the screen, part one is pretty straightforward in terms of asking you a few questions about information for automatic change requests here. And just 1, 2, and 3, you put yes or no depending on your situation. Part two actually this part relates to all requests. So it's one of those things where the IRS is asking questions about changes in the tax year. So in our case here, we put no for both. And that's pretty straightforward. So you put you sign and you date and you put your name, first name, last name at the bottom. And if you have actually hired a preparer to take care of things for you, make sure the preparer actually has his or her information as well. And part two, I want to show you, and this is actually continued. So you have a series of questions here, and you answer yes or no depending on your situation. In our hypothetical case here, everything is no, actually. Another screenshot I want to show you. This is actually lines 11A all the way to 13. So here again, we have a series of questions. Yes or no, you choose whatever applies to you. In our case here, everything is no. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. I want to continue by showing you on the screen here. Here we have part two again, and part two, this is page 3. So again, we have a series of questions that really relate to your situation, and you just have to go through them. And we put no, but if anything applies to your situation, you want to specify that here. I want to show you part 3. So part 3 is actually information for non-automatic change request, and so you have questions that go from line 20 all the way to 24B. And in our case here, everything is no again. The next screenshot I want to show you here is part 4. And part 4 is actually section 481A adjustments. Again, everything I'm telling you here, if you have any question about section 481A or any other sort of clause, let us know in the comment section. I just have, in the interest of time, I cannot really detail every scenario for you. But if you have any question, let us know in the comment section and we'll certainly get back to you. So part 4 is section 481A adjustments. And here we have part 1. Part 1 basically is a change in overall method. So here you have to choose whatever applies to you, the cash, accrual, or hybrid, okay? And when we talk about hybrid, you need to actually explain to the IRS what hybrid really means, because hybrid can mean anything. I mean, hybrid means a mixture of cash and accrual, but it can be anything else, okay? And you have to, from line 2 all the way through line 5, you have to specify the amounts in terms of inventory, accounts receivable. As you can see here, we are speaking about those balance sheet items that might be impacted when you have a change in accounting method, okay? And so part 2, you have the change to the cash method for non-automatic change request. And this also has some implications. I want to show you the next screenshot here. We are speaking about Schedule B. So Schedule B and Schedule C. And also here, part 1, general LIFO information. LIFO means last in, first out. Last in, first out. This is an inventory method. So this is important to really know. The next screenshot here, change in pulling inventories. This has an impact also in accounting method. And here you have the next screenshot. You have Schedule D, changing the treatment of long-term contracts under Section 460, inventories or other Section 263A assets. Part 2, you have change in value in inventories, including cost allocation changes. Very important. Part 3, you have the method of cost allocation. So again, we are in the spirit of transparency here. You are explaining everything to the IRS. Section B here, we have a direct and indirect costs required to be allocated. And this actually has a big impact on your cost accounting and your managerial accounting. Part 3, you have method of cost allocation. So again, we are speaking about you giving more insight to the IRS. Schedule E, you have a change in depreciation or amortization. So the bottom line here is that when we talk about changing accounting method, there are some balance sheet and income statement items that are impacted. And so those schedules and forms are giving more transparency to the IRS, or giving more information to the IRS. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 3115. So let's talk about the form itself. It's really important to really understand that if you are in business, stuff happens. You might want to change your accounting method, and you got to have a way to actually officialize things with the authorities. Okay, and so Federal Form 3115 is an important tool for businesses seeking to change their accounting methods. It allows them to request approval from the Internal Revenue Service to make a change in their overall method of accounting, including a change in accounting treatment for specific items or a change in the timing of recognizing income or expenses. And what I want to say here is that when we talk about changing accounting method, let's say versus your tax, when we talk about change in financial accounting methods versus tax methods, you have something called temporary differences. And those temporary differences actually give rise to deferred tax assets and deferred tax liabilities. So this is why you want to really be on top of those methods. And so the purpose of the form is to actually notify. You just want to notify the IRS about the change and provide the necessary information and documentation to support the request. And changing an accounting method involves adopting a new way of reporting income, expenses, and other financial transactions. And there are various reasons why a taxpayer might want to change their accounting method, such as complying with new tax laws or regulations, improving the accuracy of financial reporting, or aligning the taxpayers' accounting practices with their business operations. So Form 3115 is typically filed by businesses, partnerships, S corporations, and individuals with a business or rental activity. It's important to know that certain changes in accounting methods require IRS approval, while others can be made without obtaining permissions. And the form itself requires detailed information about the taxpayer. You saw that, and also the current accounting method, the proposed accounting method, and the reason for the change. You have to document that. And it also requires a description of the adjustments that need to be made to properly account for the change in the taxpayer's tax liability. So when we talk about Form 3115, we are speaking about changes in accounting method. And I want to really quickly talk about those accounting methods so we have a clear idea what we're speaking about. I mean, in the United States, when we talk about accounting method, we are speaking about what? We are speaking about U.S. GAAP, U.S. generally accepted accounting principles. Those form the foundation of the accounting methods that we have in this country. So accounting methods, by and large, serve as the foundation for how a business reports its financial transactions. And this happens through financial reporting. And so those accounting methods determine when income and expenses are recognized for tax purposes, which can significantly impact a company's financial statements and tax liabilities. So when we talk about financial statements, we're speaking primarily about 4 financial statements. We are speaking about balance sheet. We are speaking about cash flow statements. We are speaking about income statements, and we are speaking about changes. You want to talk about the statement of owner's equity. So those are the 4 primary financial statements that determine the foundation, the financial foundation of a company. Now, of course, you also have the disclosures to the financial statements. And so let me quickly go into those accounting methods. So you have the cash method of accounting. So the cash method of accounting is a straightforward approach where income and expenses are recorded when cash is received or paid. Okay, received or paid. It is kind of popular among small businesses due to its simplicity. However, the IRS imposes certain limitations on its use to prevent potential misuse and ensure accurate financial reporting. So this is kind of important. And so what I want to say here is that you also have the accrual method of accounting. So the accrual method of accounting recognizes income when it is earned and expenses when they are incurred, regardless of when cash is actually received or paid. And this method provides a more comprehensive view of a company's financial health, but can be more complex to maintain. And you also have a modified cash basis accounting. This is actually a hybrid method that incorporates elements of both cash and accrual accounting. It allows certain businesses to use the cash method for most transactions, but requires the accrual method for specific items. So you are speaking about flexibility there. Whilst I want to quickly remind you of today's topic, we are having a conversation about Form 3115. Let me quickly talk to you about the IRS reconstruction of your taxable income, because when we talk about changes in accounting method, we are speaking about changes in the numbers that you have reported to the IRS over the years, and also the changes into the numbers you might report this year or next. Okay. Now there are some benefits to really think about when we analyze Form 3115, right? I mean, you have compliance with IRS regulations. This is kind of important. So basically, you are able to make changes in your accounting methods while following the proper procedures and obtaining approval from the IRS. You also have timing of income recognition. So changing accounting methods can sometimes results in a more favorable timing of income recognition. Let me give you an example. A business may want to switch from the cash method to the accrual method, which could allow them to recognize income when it is earned as opposed to when it is received. This can be beneficial for matching revenue and expenses accurately, especially for business with long-term projects or contracts. You also have a tax planning and optimization. So Form 3115 provides an opportunity here you can analyze, for instance, your current accounting methods and assess whether changing to a different method will be beneficial for your tax situation. You also have a correction of errors, and also in terms of another benefits, you have consistency with financial reporting. So accrual method actually is compatible with the US GAAP. So if you are currently using, let's say, the cash method, switching to accrual method could be beneficial to you in terms of allaying the potential fears of investors, for instance, accountants or auditors for that matter. So when we talk about eligibility for Form 3115, I think I've said this before, but I want to reiterate it here. Individuals are eligible. Partnerships are eligible. Corporations are eligible. Trust and estates are also eligible. Let's talk about completing the form itself, 3115. So 3115 is pretty interesting in terms of the simplicity with which you can really fill it out, okay? Now, the form is convoluted, may seem convoluted, but in terms of filling it out, it's pretty straightforward. So what you want to do is you want to obtain the form first. You can go to the IRS website and download the form itself, not a problem. And you want to really read through the instructions carefully. If you have any questions, let us know in the comment section. And one of our team members will get back to you, explain everything for you. You want to provide general information. So general information, we're speaking here about your EIN or social, your name, first name, last name, your address. And you want to complete information about the filer. So this is section A. And so we are speaking here about your filing status, your tax year, and the accounting method you want to change. I think I've showed you this before, how the whole thing looks like. And section B is really the general information about the accounting method. So we are speaking about you have to provide details about your current and proposed accounting methods. This includes information such as the name of the method itself, a description of the method, and the primary books and records used. So again, you are giving the IRS a clear idea about what you are about to do. You want to complete Section C, additional information if needed. But this depends on your situation. And Section D is also important in terms of statements and explanations. It's all about providing anything that can support your request for a change in accounting method. So this might include schedules, calculations, or other supporting documents. Make sure to reference these attachments in the appropriate sections of the form, okay? And this will be very helpful to you. And one thing I also want to say here is that don't forget to sign and date the form. And this happens in Section E. So if you are submitting the form on behalf of a partnership or corporation, include the authorized person's signature. And please retain copies and file the form. And you want to retain copies because this is really important. You want to monitor the status of your application, and you want to use the IRS tracking system, or you can even follow up with the IRS directly if necessary. So this is one of those things where you have options. Just think about it. You have options to really see what's really happening for you. To close to this conversation, it's really important to really understand that when we talk about 3115, there is an important element to pay attention to, and that's Section 481A. And so 481A adjustments are really important to remember, especially after an accounting method change. So when a business changes its accounting method, it may result in a Section 481A adjustments. So this adjustment is necessary to account for the difference between the income or deductions reported under the old method and what would have been reported under the new method, okay? And so there are limits on tax increase from Section 481A adjustments. So the IRS imposes certain limitations on the tax increase resulting from a Section 41 adjustments to mitigate the potential financial burden on the business. So this is kind of important to keep in mind. One thing I want to say here is that you are able to basically file a tax form 3115. You can do automatic. So there is an automatic and non-automatic change request. So for automatic change request, Form 3115 is actually filed with a tax return for the year of the change. And for a non-automatic change request, you have to file this Form 3115 before the year of change, typically with the tax return for the year preceding the change. So you have the ability to really do things properly. Now, Form 3115 is generally attached to a taxpayer's timely filed original tax return for the year of the change. And however, if the change is made in a subsequent year, the form is attached to the return for that year. So you always want to attach it to the return for that year so you have a clear idea what's really happening. Okay. The Form 3115, there are some special considerations. Remember that the adequate disclosure is important. Timeliness is really important. Constant requirements, user fee, attachments, and in some cases, it's just a lot better to consult a tax professional so you have a clear idea what's really happening. One thing I also want to say here is that you want to really remember that there are some deadlines and extensions for this form. For automatic changes, basically there is no IRS consent. For non-automatic changes, you may have consent depending on your situation, but the extension really, it's important to understand that if you request an extension to file your original income tax return, the extension also applies to the filing of Form 3115. Okay, and when we talk about Form 3115, there are mistakes such as incomplete or missing information, incorrect accounting method description, improper or missing documentation, failure to follow the correct procedure, incorrect or inconsistent numbers, missing or outdated form version, failure to consult a tax professional could be a problem in the end. Thank you so much for your attention. I really appreciate it. Let's quickly do a recap of today's conversation. So I was just talking to you about Form 3115. And so I gave you the overview and now the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.